turning to, this is a conglomeration of different issues. Turning to the Middle East, I'm also involved with the Middle East. The Middle East, I think, is a classic case of a black swan event. The Jasmine Revolution that erupted in Tunisia, and how it spread to Egypt, to Syria, and to Yemen as well. To some extent to Bahrain, Oman, much less to Oman. Libya, in the state of civil war. And what this chart shows is the lack of political freedom in a Cartesian sense plotted against poverty. Poverty is just per capita GDP. GDP of a country divided by the population. Quite simple. Lack of political freedom is a bit more complicated. It comes from a World Bank governance index. The World Bank hasn't been doing these for the past 10 years. And this measures the, it's called Voice and Accountability Index. So it's the political voice and government accountability to its citizens. The farther up you go, the less accountability the government has. And you can see that the governments, according to the World Bank, and all these countries are members of the World Bank, by the way, so they are either directly or indirectly involved in these surveys, or at least to some extent cannot really question the surveys too much. But at any rate, you see that Saudi Arabia, Libya are at the top, and Libya is in a state of civil war. And it plots pretty neatly. Of course, when we first did the analysis, we were looking at many other variables: unemployment, inflation, government deficits, government assets, government debt, all those things. But this really showed it quite simply. And it also shows that Turkey, which is that big blue dot right at the bottom, there in the middle of the poverty level, is not that wealthy a country, but because it has a democracy, it has avoided the Jasmine Revolution. This is a democracy, has been tested by elections where governments and parties have been voted out of office and then back into office. So that's a good sign. But this also brings up, as I think, another lesson, is that the importance of transparency and how it relates to government voice and accountability. And for us, when we go through our visits to the country, we rely on national source data. I mean, everyone ultimately relies on national source data. That is often verified by the IMF and World Bank to some extent. And we put a very big premium in our work on transparency. Transparency means not only the ability of a government to provide comprehensive, accurate, and timely statistics or information, but also to communicate its policy intentions. And often what we see is countries that have weak credit, intrinsic credit strengths, credit fundamentals, or those countries that are the least transparent. Now, the final slide I have takes the same chart, and we just expanded the sample size. We didn't just look at Middle East, North Africa, that's what MENA means. But we included two countries that I'm pretty much involved in on a daily basis: China and Vietnam. And lo and behold, even though China perhaps will be printing our dollar bills one day, probably not. But certainly, I think the odds are over the next 10 to 20 years, perhaps the renminbi could become another global reserve currency like the US dollar. China is also in this heat quadrant, the upper northeast quadrant. Now, China has not suffered a Jasmine Revolution, neither has Vietnam. So 2 dimensions are not enough. We probably have to look at a 3rd dimension, a z-axis, to try to figure out why China hasn't. Perhaps one of the reasons is the vast rise in incomes, also the very poor starting point in China. It was after the Cultural Revolution, of course, where Deng Xiaoping came along with the open door policy. And so if China were to undergo some social upheaval, this could have very serious consequences on the global economy. Just as Saudi Arabia goes through some social upheaval, already we're seeing higher oil prices because Libyan oil production was knocked down. The Libyan oil production is only a little more than 1 billion barrels per day. Saudi Arabia is producing close to 9 million barrels per day. If that were disrupted, we'd really be in a swans because they're known unknowns. They're not a black swan event would be unknown to use the Rumsfeldian jargon. But they are things that we think about in the future, and of course they are things that the senior leadership in China is doing a lot of thinking about as well. Those are the remarks I wanted to make, and I hope it was in some way relevant to your concerns. I mean, this is macro and 35,000 foot above the ground level type comments, perhaps. But I think one of the themes that ties in with all of us is that whether government's going to get their fiscal house in order to help ensure long-term growth, and also to keep down the tax burden on all of us. Well, thank you. We have 5 minutes for questions.
We have some time for questions. Please, if you would allow me to bring the microphone to you to save time, and that way we don't have to repeat the question, but out of the courtesy that everyone can hear. So if we do have any questions, let's open this up. The younger Wu speaketh.
All right, I'll speak loud if that's okay. I'm actually from Tokyo, Japan. And a couple of questions regarding exactly what's happened there. I mean, you talk about a black swan, and clearly what's just happened in Japan. You could easily find insurance companies have to start repatriating some dollars, have to start selling some overseas assets, as well as local people do as well in order to actually survive. What do you see as that big as the impact on the rating that you have there? And do you see that changing in the next period of time, or is it too early to tell?
Well, that if that happens, that would actually be something that speaks to the underlying credit strength of Japan. Japan has not only huge domestic savings, mostly in the households. Household savings are 3 times GDP, the stock. Savings rate has come down as low as the U.S. savings rate. There's this huge stock pool of savings, and on a net basis, it's still twice GDP. Plus, they have external savings, mostly financial institutions, various kinds, held abroad. The financial savings are huge. They're 53% of Japan's GDP. GDP is $6 trillion. They're almost twice as large as Germany's external assets. So there is this huge pool of savings they can bring back. They brought it back very rapidly with destabilized currency markets, I think. The Bank of Japan holds a lot of U.S. government securities as well. That could happen to some extent. We haven't seen much of that happening yet, but we do recognize that the P&C insurers are under stress. We've taken several negative rating actions as a company on Japan since the earthquake, not on the sovereign. We had the sovereign on negative outlook at a AA2 rating before the earthquake. But we do see some stress in certain sectors, like the corporate sector in Japan, in addition to the TEPCO power company, which owns the Fukushima power nuclear plants that are struggling to contain the radiation containment, radiation from spreading outside of the plants. There are some other sectors too, steel, refining, that have been affected by this small area in Japan. Right now, we see the major effects on those certain companies. Of course, there's ripple effects globally. When we, I think a week after the earthquake, we published a cross